Welcome back to Investing Talk podcast. Today, we're taking a focused look at ONEO. You sent over a few key documents, their 2025 investor update, a due diligence piece, and a stock analysis. And, well, you want the essential insights without getting bogged down in every single detail. So, our mission here is to unpack these sources, pull out what's really important for you to grasp about ONEOK right now. We'll hit their recent financials, the dividend situation where they sit in the market, and, some things that might influence their future path. Think of this as your shortcut to getting up to speed.
That's right. It's a good set of materials, and the goal is definitely to synthesize it all. We want to give you a clear picture of ONEOK's current position. We'll cover those financials, yes, the dividend payouts, their market standing, and factors that could affect where they're headed. It should provide a streamlined view.
Okay, great. Let's start with those recent positive financial signals. The first quarter of 2025 results, what stood out there?
Well, the main thing is they reported higher earnings for Q1 25, and importantly, they also reaffirmed their financial guidance for the whole year. That suggests a strong start.
Okay, higher earnings and holding firm on the outlook. Can you give us the specific numbers?
Yes. Net income for Q1 was $691 million. That figure includes non-controlling interests. And their adjusted EBITDA came in at $1.78 billion.
Adjusted EBITDA, just quickly, that strips out certain things to give a clearer operational picture, right?
That's it. It helps see the core profitability. And the fact they're sticking to their full-year forecast after Q1, well, it points to solid performance and, confidence internally.
That definitely sounds encouraging. And speaking of things investors often like to see, what about their dividend? It seems pretty steady.
It is. Consistency is definitely a theme there. They've declared a quarterly dividend of $1.03 per share, which works out to $4.12 per share annually.
And the dates for that?
The payment date is set for May 15th, 2025, with a record date of May 5th. For many investors, that kind of predictable return is, well, reassuring. Often signals financial health.
Makes sense. Something else coming up soon is their annual meeting. Anything specific listeners should note about that?
Just awareness, really. It's a virtual meeting scheduled for May 21st, 2025. These are key governance events. Shareholders get to vote on company matters, hear directly from leadership. It's good to be aware it's happening.
Right. Now, maybe stepping back a bit for folks less familiar, can you sketch out ONEOK's business? What do they actually do, and where do they fit in the energy landscape?
Certainly. ONEOK is a major player in what's called the midstream sector of oil and gas.
Yep.
Think of them as the crucial link, the infrastructure connecting where energy is produced to where it's ultimately used. Their main activities are gathering, processing, storing, and transporting natural gas, and also natural gas liquids, or NGLs.
Okay, so the middle part of the chain. And how do they make money? Is it tied directly to oil and gas prices?
Mostly, no. And that's key. Their business model is largely fee-based. This generally leads to more stable earnings because they get paid based on contracts for using their pipelines and facilities rather than the often volatile commodity prices themselves.
So a bit like being a toll road operator for energy molecules rather than selling the molecules themselves.
That's a pretty good analogy, actually, yes. Their services include gathering raw gas from wells, processing it to meet pipeline standards. They also handle NGL fractionation, that's separating out valuable liquids like propane and butane. And of course, they have significant transportation pipelines and storage assets. They're big in key areas like the Permian Basin and along the Gulf Coast.
Got it. Okay, looking ahead now, the reports seem pretty upbeat about growth. What projections caught your eye?
The earnings per share, or EPS, growth forecast is interesting. They're projecting greater than 15% growth in 2026 compared to the midpoint of the 2025 guidance.
Over 15% in 26. And what about 2025 itself?
For 2025, the guidance midpoint for net income is $3.45 billion, including those non-controlling interests. That's up 11% from the prior year. Adjusted EBITDA is projected to hit a midpoint of $8.225 billion. That's a significant jump, 21% higher than the previous year.
Wow, 21% on EBITDA. And earnings per share for 25.
The midpoint there is projected at $5.37 per diluted share. That represents an 8% year-over-year increase, though you need to exclude some one-time items from 2024 to see that underlying growth.
Okay, those are some fairly strong projections. What's fueling that optimism? What are the main drivers?
It seems to be a combination of things. One is just higher volumes moving through their existing systems, and the other big factor is the strategic benefit from acquisitions, particularly the recent InLink deal. These are expanding their scale and service offerings.
Right, acquisitions play a role. Now, this is a big sector, so ONEOK must have competitors. Who are the main ones mentioned, and how does ONEOK stack up?
The analysis highlights Enterprise Products Partners and MPLX as key competitors. Each has its own strengths.
Okay, let's break that down. What are ONEOK's advantages?
Well, as we discussed, their strong position in key basins like the Permian, those strategic acquisitions, and as we just saw, that high projected adjusted EBITDA growth.
And Enterprise Products Partners, what's their edge?
EPD is known for having a very large, diversified asset base. Think extensive pipelines, storage, processing facilities, and historically very stable cash flows.
Okay, and MPLX?
MPLX has a significant presence, especially in the Marcellus and Utica shale regions in the Northeast. They emphasize operational efficiency and have strong financial backing from Marathon Petroleum. So different strengths, different geographical focuses in some cases.
It sounds like a competitive field, but each has its niche or focus. Now, of course, no investment is without potential downsides. What risks or challenges do these reports flag for ONEOK?
There are several to keep an eye on. Regulatory risk is always present in energy. Think potential changes in energy policy or environmental regulations. That's a constant factor.
Makes sense. What else?
Fluctuations in demand for natural gas and NGLs. Even with fee-based contracts, significantly lower demand could eventually impact volumes and revenue. Also, shifts in interest rates. That can affect their borrowing costs, especially with debt taken on for acquisitions, and it can also make dividend stocks generally more or less attractive to investors.
So monitoring debt levels, particularly after the EnLink deal, is important.
Yes, the reports mention that. And related to acquisitions, there's always the challenge of integration, making sure the acquired businesses fit smoothly and deliver the expected synergies. Plus, ongoing environmental concerns might require additional investment down the line. And, broader supply chain issues in the energy sector could potentially cause disruptions.
Okay, those are definitely important considerations. So putting it all together, what's the general feeling from analysts about ONEOK? What's the overall sentiment?
Generally, it seems quite positive. Analysts tend to like the stable, fee-based business model, and they see the strategic moves, like acquisitions, as constructive. It's often viewed as a hold or sometimes a buy candidate, especially for investors looking for that mix of stable earnings and some growth potential.
And what should people watch for going forward? Any potential catalysts?
Key things to watch would be upcoming earnings reports, seeing if they continue to meet or beat expectations. Also, updates on how well the integration of acquisitions is going, any news on cost savings or operational synergies there, and of course, any announcements about potential new expansion projects. Beyond the company itself, just keeping an eye on the broader energy market conditions and, crucially, ONEOK's ability to actually execute on its plans.
Okay, so to try and wrap this up, ONEOK looks like it's showing financial strength, those higher earnings and the reliable dividend. Their strategic moves in the market, the acquisitions, and the positive projections are definitely notable points.
That's a fair summary. But, like with any investment, there are those other factors. Regulatory changes, successfully integrating new assets, market demand that need careful watching.
Exactly. It's never quite that simple, is it?
It really is. The reports paint a picture of a company with solid fundamentals and clear growth plans. But diligence means considering the risks alongside the potential rewards.
Well, we hope this discussion has given you a clearer handle on the key takeaways from the materials you send over on ONEOK. There's always more depth to explore, naturally, and we definitely encourage you to dig deeper into any areas that caught your attention. And if you found this focused analysis useful, please do subscribe, like, and maybe leave us a comment. We genuinely appreciate hearing your feedback.